Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Devon. He's the CEO and CIO of DFD Partners, a data-driven tech platform that connects differentiated asset managers. We're going to get his outlook for 2023. It's great to have you with us, Devon. Welcome to MarketSite.
Thank you so much for having me.
All right, we also have a special announcement as well, raising $1 trillion by 2030 to close the wealth gap, but we'll talk about that in just a minute. I want to get your outlook for 2023. What's the good news for 2023?
Yeah, so when I look at 2023, there is going to be some good news, right? And the good news is that at some point the Fed is going to have to pivot and they will have to cut rates, which are positive for broadly for risky assets, and we think we'll see a sustained recovery after that happens. And
of course I have to ask you, what's the bad news?
Yeah, so on the flip side, there needs to be a lot of negative news on the economic side of the deal, right? So you're going to have to see unemployment, a decline in unemployment. You're going to have to see areas where, areas in the market where in order to cut the rates, you're going to have to see not only unemployment, but you're also going to see broadly market volatility. You're going to have to see risky assets actually decline. That will give the data for the Fed to be able to make that move and cut rates.
So it sounds like we're going to be focused on macro for quite some time in 2023. Do you think we'll start to get back to fundamentals?
Yeah, so I think second half of 2023, you're going to start to see after we start seeing risky assets increase, you're going to have to that's going to paint a nice backdrop for the market to focus really on corporate fundamentals into 2024.
Yeah. Tell me about this announcement, a pledge to raise $1 trillion to help bridge the investment gap by 2030. That's an aggressive goal, but a good goal to have.
Yeah, so if you look at the current $85 trillion in globally managed AUM, only 1.4% of that is managed by diverse owned fund managers, right? Mm-hmm. So 1.4 out of 85 trillion, right? So we have a lot of ground to cover, and that's why it is our big initiative. However, with the help of large institutional investors, asset managers, and wealth managers, we can and will close that gap with diverse asset managers.
So tell me more about DFD Partners, because you are data driven, you are a tech platform, you're bringing together all these diverse asset managers. How does the ecosystem work?
Yeah, so the ecosystem is asset managers, fund managers, and also allocators, right? Mm-hmm. So we leverage not only public data but paid data to match a fund manager and asset manager that has that product fit with an allocator that has that product need. And the benefit for our clients, which are the asset managers, it shortens their sales cycle, it reduces their client acquisition costs, but more importantly, allows them not to have to add to that expensive headcount. So we provide cost-effective scale for our clients.
All right, appreciate the insight, Devon. Thanks for joining us on Trade Talks.
Thanks for having me.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.